Yeah, do you
So
want to give us your kind of your general sort of outlook at the minute, and kind of in the context of what I'm saying about this squeeze that's ongoing?
yeah, absolutely. So I always think it's a good practice, just because we have different different types of investors watching to kind of think about the world in different durations. Sort of from a risk management perspective, we tend to focus on things that occur, under one calendar year. That tends to be where most of the volume and actions and trading tends to take place. And if you think about it on a sort of 6 to 12 month forward basis, we're pretty sure that we know that we're going to wind up in a state where the Fed is very clearly pausing, assessing the damage that it's done to the economy through the long and variable lags that monetary policy tends to work through the economy in terms of trying to achieve its inflation objectives. That sort of the path to getting to that state is likely to occur over the next few months. Which is the Fed will sort of signal officially to market participants that sort of it's concluded its rate hiking process, and it's about to do that. So it's our view that that process there is likely to contribute to some upside tail risk, right tail risk in the market, just given where positioning is and given where sentiment is. The problem with that, from our perspective, and again, this is our view, and we can debate this later in the presentation, is that I don't know that the path to getting to that pause is as clear as the markets are probably interpreting it this week. And again, we're recording here on Tuesday, October 25th. It's our view. There's a couple of inflation reports between November 2nd and December 14th Fed meeting, and it's not clear to us from the perspective of how strong and resilient the U.S. economy has been that we're going to see any materially positive dynamics on the inflation front, particularly with respect to core inflation. So we think there's certainly risk relative to a lot of the incremental positioning in the market between now and, let's call it, I don't know, December 14th. And then probably beyond December 14th, there's probably some upside risk associated with, again, the market eventually moving to that pause. We'll talk a little bit later beyond that. We still have to kind of live in a world with a 5% Fed terminal Fed funds rate and what that ultimately means for the economy. We do believe we're headed for a hard landing at the end of this rainbow. And unfortunately, that hard landing has not been adequately priced in. So 2023 is likely to be quite as volatile as 2022, just probably not kind of one direction to the downside.